Here's a question for you. Have you ever placed what seemed like the perfect trade only to watch it fail miserably? Well, what if I told you that failure might not be your fault? There's a hidden system used by the big players in the market that most traders never see. And in this video, I'm going to show you how to spot it. My promise to you is if you stick with me and learn what I'm about to teach, you'll see how to dramatically increase your wins, cut your losses, and gain the confidence to trade like the pros. And it all comes down to one simple concept. Most traders think success is all about finding the right indicators or following the news. But here's the truth. The market is manipulated by institutional players who use computer programs that we call algorithms that leave footprints behind. And if you're not looking for these footprints, you're trading blind. So what are these footprints? They're called algorithm signatures, bullish order blocks, and they reveal where the smart money has entered the market. Therefore, if you can spot these blocks, you're trading alongside the big players, not against them. What if you could predict with high accuracy where the market will reverse or rally? And what if this simple strategy could change the way you trade forever? Stick around because I'm going to show you exactly how to do it. Picture this. You place a trade knowing you're aligned with the big players. The market moves in your favor and you see consistent profits in your account. No stress, no emotions, and no guesswork. Just confidence in your strategy. Here's how it works. A bullish order block is a bearish candle that occurs before a strong upward move. This is where institutional players have placed their orders. But here's the catch. Most traders overlook this entirely. Therefore, they are trading against the very people driving the market. Let me show you. For example, this down candle is a bullish order block. But you've got to be aware of the manipulation that occurs before the bullish order block. For example, let's look at this price action. This swing low was strategically engineered at the previous daily low, meaning that level, that line there, is the low of the previous day. So this is Thursday. That line is the low of Wednesday. And that's very important because it does a couple of things. And this is where you must pay close attention if you really want to learn how to spot these bullish order blocks. Because when the market breaches a previous daily low, it triggers short sellers into the market who have orders already placed in the market to get them short as soon as the market goes below the previous daily low. But look what the algorithm does. The computer program triggers them short and immediately rejects. Do you think that's by coincidence? Absolutely not. That is by design. That is by code. They have coded that algorithm to do exactly that. But why? Why have they done that? What does it do? What's in it for them? Well, if you think about what's going on here, as soon as the algorithm reprices below the previous daily low, the algorithm knows that that will trigger new short sellers into the market because they've got orders beneath that level to go short immediately when the previous daily low has breached. And so the algorithm enters them into the market short, then immediately rejects and reprices higher by more than 100 pips, which blows out the accounts of retail traders because for most retail traders, 25 to 50 pips is the maximum level of stop that they can hold onto their position because they over leverage themselves and have very little funds in their account. That's just how it is, folks. That's just the truth. Okay. And so what that does, and so you still might be thinking, why? What's in it for the big players? Well, here's the deal, folks. They must do it. The market needs liquidity. And the market is not designed for you and I. It's made for the big players. And so it is rigged to take our money. But not if you know how to spot the footprints and be able to trade alongside the big players. I'm going to show you how exactly. Okay. So why was this engineered? Why did the algorithm come down there and immediately reject? What does that have to do with the institutions? Because you've got to think about what's going on. When the market goes down here, it triggers short sellers into the market, as I've said. It then stops them out by immediately rejecting, but it also introduces new long traders into the market. Okay. And those folks who have bought at that rejection of the previous daily low now have sell stops that reside under that level. Okay. Because they need to protect their long position. But the algorithm knows that. And the algorithm has engineered that because the algorithm wants those sell stops to be triggered because the algorithm and this entire market is designed to benefit the big players. So the algorithm reprices lower, not by coincidence to go below that swing low. It is intentional because that will trigger the sell stops for those retail traders who have taken a long, right, at that level because those retail traders have seen the market come down to a previous daily low and immediately reject. And that is their strategy. And the computer programs know that. But again, you might be asking yourself, why? How does this benefit the institutional player? Because when these sell stops are triggered, it gives the opportunity for institutional traders to accumulate those positions, right? These retail traders are forced to sell their positions to the institutions at a discount. How amazing is that? Institutions can buy at a low price. And who's selling it to them? Retail traders. And what do? Where do they offset their long positions that they've just bought at a discount? They offset those long positions at a premium at current daily highs or previous daily highs. How does that work? Well, just like there's retail traders who are long the market from down here, there are retail traders who have shorted the market from the high of the current day. These folks and these folks. And where do you think they have protective stops? Right there above these swing highs. And why do you think the algorithm has allowed the institutional players to accumulate these positions at a discount, reprice the algorithm to allow them to offset their long positions at a premium? And who's going to buy these positions from the institutional traders at a high price? The retail trader. Because the retail trader is short, unknowing to the retail trader that is manipulation, with buy stops above a liquidity pool, basically a swing high or high of the day, at a level where the algorithm knows will be these buy stops, allowing institutions who bought down here offset their positions up here. And again, who are they selling it to? To the retail trader. Can you see how the market's rigged? But it's not rigged if you know the bullish order block, because the bullish order block is the footprint formed by the algorithm, which is a computer program that the institutions use to buy these large positions at these key levels. The bullish order block is this down candle that takes out liquidity on the left, and time's important. Okay, that should be at a very key time, and that down candle there is at 8:30. Right, 8:30 is an important time. It is the second hour and 30 minutes within the second hour. Right, the ICT kill zone for New York starts at 7 a.m. So 8 a.m. is the second hour. 8:30 is 30 minutes within that second hour. Okay, now that down candle is the bullish order block, and it's validated once we have the market trade above the open of that down candle. That is when that down candle is validated as a bullish order block. Okay, and what you're looking for then is a down candle coming into that bullish order block. Right, so that down candle is a bullish order block. This down candle is coming into that bullish order block. It's not the green candle, it's the down candle, the black candle. Okay, but you need the green candle to reprice above the open of the down candle to verify that down candle as the bullish order block. Notice how once that bullish order block has been established and validated, nothing is going below it. Isn't that amazing? That is the algorithm footprint. Okay, now this here is a great opportunity for us to know about the bullish order block to accumulate a long position. What time is that? That's 9:30. That's another very key time. That is the time when the New York equities market opens, the perfect time to be trading the gold market. Okay, that is when the gold market moves the most. It does move at other times as well, but that is the perfect time where the algorithm will reprice to a key liquidity pool, in this case above the market. Okay, now if you're too scared to accumulate a position at that time because you're scared that this down candle is coming down and it might continue to go down, right, then you can wait for the next up candle and these two down candles after that, because they are also coming down into not only this down candle, which is a new bullish order block, but also the original down candle, which is the original bullish order block, and time important. Those two down candles are being formed at 10 a.m. That is a new hour. And if you still don't want to enter a long position at that point, you can wait for this next up candle to validate those two down candles as the bullish order block, and then you can enter at 11 a.m. where you can see the market's coming down into these two down candles, which is also a bullish order block. Okay, and you will target these swing highs, right, as the market has done. And that is no small move, folks. If you got in a long position at 9:30 on this down candle, which is coming into the original bullish order block, then a move back up to the high of the day is a 150 pips. If you weren't comfortable, you waited to 10 a.m., which is these two down candles, still coming into the original bullish order block. You can see the wicks, it just has to connect, okay? And you entered at 10 a.m., well, that is 140 pips. And if you still did not want to enter and you wanted to see more confirmation with this up candle and these down candles coming into this bullish order block, you could still accumulate a hefty 98 pips. That is the power of the bullish order block, okay? That's what you're missing out on by not being able to identify the bullish order block, okay? Many traders think order blocks are just support levels, but they're much more powerful. Order blocks are the key to understanding market structure. When this down candle becomes a validated bullish order block by another candle trading above its open, validating that down candle as the bullish order block, then at that point you have a change in the state of delivery, right? You have a change in market structure. This was the SOAR program that was running, okay, to take out stops residing under that swing low. Once there's a change in the state of delivery, which establishes a change in market structure, then the buy program is now initiated, targeting liquidity pools above the market, which are going to be at the high of the current day. Okay? And that's what most traders do not understand, right? So if you are not using these bullish order blocks and you don't understand them and you ignore them, you're missing the big picture. Now, let me ask you this. How different would your trading life be if you could consistently predict market movements? That's exactly what you'll learn inside of my VIP membership program on School. But here's the thing. It's not just a course. It's a community of traders who are applying these strategies and seeing real results every single day. Therefore, If you're ready to take your trading to the next level, then join me in the VIP community, Spots Unlimited, and price is increasing soon, so don't wait. Trading isn't just about charts and numbers, okay? It's about building a life of freedom. Bullish order blocks are just the beginning. So what's next for you? Subscribe to the channel if you haven't already for more tips, and let's keep building your success story together. The link to join the VIP program is in the description of this video below. I look forward to working with you on the inside.